Hi everyone, I am Shruti and welcome back to G2 Finance Tech's weekly market update. This week's story revolves around cautious optimism. Trade talks are in motion, central banks are reassessing, and markets are reacting accordingly. Let's walk through the pulse of the week across the major regions. United States, cautious recovery and Fed patience. US markets closed the week narrowly mixed. Small and mid-cap stocks led for a fifth straight week, while the Nasdaq and S&P 500 ended slightly lower. Still, it was a decent week overall with optimism bubbling up. The main buzz? Hopes of a breakthrough in trade talks. Midweek reports of a US-China meeting in Switzerland and the first US-UK trade deal since the new tariffs lifted market spirits. Earnings added support, though investors remain cautious as forward guidance reflects trade policy concerns. The Fed held rates steady, with Chair Powell acknowledging rising risks to growth and inflation. The central bank remains in a holding pattern, watching closely as new policies reshape the economic landscape. The economic data added color. Services PMI improved to 51.6, showing ongoing expansion, but inflation pressures persist. Tariff related price hikes are showing up across sectors. Meanwhile, yields rose and treasuries slipped as trade optimism nudged risk appetite higher. Europe, gradual shifts and policy recalibration. The Stock 600 notched its fourth weekly gain, helped by easing trade tensions and signs of policy shifts. Germany and Italy led the charge, while the UK lagged slightly. The Bank of England surprised with a rate cut, though internal disagreements hinted it may be a one off for now. Across Scandinavia, central banks held steady but signaled readiness to ease if trade shocks worsen. Germany's factory output surged ahead of tariff deadlines and confidence indicators showed a cautious mood. In the UK, the housing market cooled after tax breaks ended and business sentiment dipped, a reminder that the broader recovery still has fragile points. In Japan, steady gains and trade hurdles. Japan's equities had a strong week, helped by easing global risk and holiday thinned volumes. But the backdrop remains mixed. While the US UK trade deal raised hopes, progress with Japan has been slow. The US hinted talks could take much longer, especially given tensions over auto and steel tariffs. Meanwhile, wage growth disappointed again. Real wages fell 2.1% year over year, casting a shadow on Japan's inflation hopes. The Bank of Japan's outlook remains cautious, with high external uncertainty delaying further rate hikes despite prior plans for normalization. China, stimulus in motion. China's markets rallied ahead of the US trade talks. Reports of exemptions and back-channel communication sparked hope. Meanwhile, the PBOC stepped in with liquidity, cutting its reverse repo rate and easing lending rules to buffer economic shocks. Tariffs are clearly biting. April export data showed a 21% drop in US bound shipments, even as exports to other regions surged. All eyes are now on the Geneva meetings, where Vice Premier Hallie Fang and Treasury Secretary Besson are expected to outline potential de-escalation paths. At G2 Finance Tech, we believe this moment defines how tactically policymakers are responding. The mix of decentralized talks, rate adjustments, and fiscal promises shows just how fluid this global landscape remains. Our take: what we are seeing is not a full turnaround, but it's a tactical shift. Governments are talking, markets are adjusting, and central banks are tuning their stance to match an evolving risk map. For investors, G2's view is simple: stay active, stay diversified, and don't chase noise. The fog of tariffs and trade policy will lift, and those with a clear plan will be best positioned to capitalize. That's a wrap for this week's update. I'm Shruti. Thanks for joining us at G2 Finance Tech. We'll see you next week with more market insights and sharp takes. Thank you.